Most traders rely on historical price action to navigate the market. But what if I told you that when trading gold, looking at the past is useless? This is the one pair where the left side of the chart tells you nothing. So how do you anticipate the next move when there's no price data to guide you? Most traders would be completely lost. But for me, these setups were a no-brainer. Why? Because I wasn't looking at the past. I was reading real-time smart money behavior. I had already marked out my 2 points of interest before the move even happened. And during the London session open, I saw something that 99% of traders completely miss. At that moment, I had 2 choices: enter with full conviction or let the trade slip away. I didn't hesitate. I knew exactly what was happening and I executed without second guessing. Now here's the real question. How did I know this was a high probability trade before it even played out? That's where things get interesting, because what I saw is something most traders don't even pay attention to it. At first glance, everything screamed bullish. Every single time frame showed a strong uptrend, and price had just tapped the psychological level of 3,000, an all-time high for gold. Any trader looking at the chart would have assumed that the market was still pushing higher. But that's exactly where most traders get trapped. I saw something different. While everyone was focusing on the higher time frames, I was dialed in on the intraday order flow. Price wasn't just sitting at an all-time high, it was losing momentum, shifting bearish, and showing clear signs of distribution. And the moment I spotted the change in order flow, I knew exactly what was about to happen. In fact, I called this trade before it even formed. My inner circle already had the setup because I broke it down in my daily forecast video.
And that's why confirmation in gold is very, very important. So if you do see price coming, I mean, I got 2PY. I might have over-refined it. Actually, yeah, I did actually over-refine it, but it's fine. And if we do see this coming in here, then yes, we can look for a sell. Right now, if you can be.
So when price reached my POI, it wasn't a surprise. It was simply execution time. I wasn't guessing. I wasn't reacting. I was following the script. I studied this move using the 5-minute and 15-minute time frames, because at the end of the day, price action only matters when you understand the narrative behind it. Most traders rely on daily and 4-hour charts, but they miss the real structure shifts happening at the intraday level. The market was following my trading plan step by step, and I knew that the second smart money stepped in, this move would unfold exactly as expected. But here's where most traders fail. They panic because there's no data on the left to guide them. They see a strong uptrend and convince themselves that it's too risky to sell. They forget that the market isn't just about direction, it's a battle between buyers and sellers. And when one side gets too aggressive, the market has to correct. That's exactly what I was waiting for. This was the moment of truth. Price had reached my key POI, but the real question was, would sellers step in, or was this just another fake out? The first thing I looked at: timing. If you're part of my inner circle, you already know how important this is. Smart money doesn't just enter randomly, they time their moves with precision. And as London session unfolded, order flow started shifting exactly as I expected. Buyers were running out of momentum, and all I needed was for sellers to step in. But here's the thing with gold. This pair is built on manipulation. Unlike other assets, gold has no liquidity pools on the left, which means the market is always creating liquidity on the right side. That's why I never enter without confirmation. If you jump in too early, you're just handing money to the market makers. And because of this, I also took a hedge buy position, not because I was unsure about my sell, but because smart money plays games. There was a chance this could have been another liquidity grab to push higher. And in trading, protection is everything. Best case, my short plays out perfectly. Worst case, I'm covered if the market moves against me. Then price reached my second POI and everything lined up. Buyers were exhausted. Momentum was vanishing. The moment sellers stepped in, I executed. What's the biggest lesson here? If you miss this trade, that's fine. But what matters is knowing what you're doing and trusting your plan. Confidence doesn't come from guessing. It comes from understanding exactly why you're entering. And when you have that clarity, you don't hesitate. The second I entered, price started melting. No hesitation, no fake outs, just a clean and aggressive push to the downside. It was clear that smart money had stepped in and the order flow was completely in sync with my analysis. At this point, I wasn't just watching, I was looking for scale-ins. When momentum is this strong, it's about following the flow of liquidity and adding when the market confirms your bias. But then something happened. The moment of panic for most traders. As price reached the next major demand zone, it slammed the brakes. What was once a smooth drop turned into accumulation. At this moment, most traders would have panicked. Why? Because price was showing clear signs of buyers stepping in. Momentum slowed, consolidation began, and for traders without a plan, this is where they start second-guessing everything. But instead of panicking, I executed my hedge strategy. Why I hedged instead of closing early? I didn't exit my shorts, I adapted. I took partial profits when price hit demand, securing gains. I hedged with a buy position to protect against a potential reversal. This wasn't an emotional decision, it was mechanical. I don't trade based on feeling, I trade based on rules. My system is either execute or don't trade at all. What traders without a plan did wrong? They saw a reaction at demand and closed everything out of fear. They didn't prepare for accumulation and missed the chance to adapt. They let emotions dictate their actions instead of following a structured plan. Knowing how to react when the market shifts is what separates amateurs from pros. The market will always try to shake you out. The question is, are you prepared for it? At this point, I had already secured partial profits at the major demand zone and hedged my position just in case price reversed. But if the sell played out fully, my final target was set below the next order flow low. Why? Because during the Asian session, price had created a clear liquidity pool, a perfect spot for smart money to drive price into before any potential reversal. How I knew it was time to exit. As an intraday trader, you can't just set a TP and walk away. You have to monitor price action in real time. The one mistake traders make when closing too early or too late, most traders don't have a mechanical approach. Here is what they do. They exit out of fear when they see a reaction. They hold too long because they want every last pip. They make emotional decisions instead of trusting their strategy. What's the big takeaway if you miss this trade? If you're focusing on the money, you're thinking about this all wrong. The real skill isn't just catching moves, it's understanding the market at a deep level. The real question isn't how much did I make? It's did my analytical thinking get me in the right position? At the end of the day, trading isn't about predicting, it's about adapting. If there's one thing you need to take from this breakdown, it's this. You have to be open-minded, think in 360 degrees, and react fast to what the market is telling you. If you're stuck in a rigid mindset, the market will punish you. But here's the mistake most traders keep making. They overcomplicate everything. Instead of following a structured plan, they hesitate, chase FOMO, and second guess every move. That's why they lose. The goal isn't to think what's next. It's to have a plan that already tells you what's next. How does this relate to future setups? The market is repetitive. The same patterns, the same psychological traps, the same smart money moves. The only difference is whether or not you've trained your eye to recognize them. What should you do next? Go back and back test this setup based on everything I just shared. Look at how smart money played this move and train your mind to spot these mechanics in real time. Or if you want to speed up the process, join my inner circle where we break this down in full detail every single day. Now, here's my question for you. Would you have taken this trade or would you have hesitated? Drop a comment below. I want to hear how you would have handled this setup. And if you found this breakdown valuable, make sure you're subscribed because the next trade breakdown is going to be even crazier, guys.